let's appreciate environmental management and impact on financial performance. When you are critical about environmental management, what impact does it have on your organization? So the first thing is it improves revenue. Why? Because your business reputation will be improved. If you take care of the environment, you should expect to have a good reputation. That's what we believe in as organizations. Then cost reduction. If we are able to manage the environment, I gave an example, say banning stationery. It means the risk of you being sued by maybe environmental pressure groups will be reduced because you're taking care of the environment. I remember there was a time when the pressure groups in Malawi were trying to discredit ACCA plastics. By then, ACCA plastics was very serious in making plastic papers. So those plastic papers, I remember the former president tried to ban them completely. Why? They were being thrown anyhow. So they would damage the environment because they cannot be recycled. So if you're able to manage the environment properly, you reduce cost. Then increase in cost. So you can see it can be a decrease or increase as well. You should take note that in the moment you are involved in an organization, so you are working for ACCA plastics or companies which manufacture plastic, you should take note that the costs are going to increase. One, it means you have to provide for legal and regulatory costs. You'll be regulated on how to produce plastics. We had this issue with Mr. Zombe, who was trying to open a new factory. They are saying you can't set your factory now because we are looking at how you are going to affect the environment. So all those costs you are going to suffer in the same. You can reduce costs if you are in other areas, but however, you can also suffer extra costs as you are complying. It's just like accountants. When you are complying for accounting standards, there's a benefit, but mostly the costs exceed the benefit because you spend a lot of money training employees, not benefit at all. Then cost of failure. You should take note that the organization is bound to fail because there will be issues of cleanup costs and fines during disaster. So this is also common for companies which manufacture chemicals or even fuel. So those chemicals, let's say you manufacture petrol, there's a chance that you can burn somebody's house accidentally. So in that case, you might be fined. Or you need to clean up the environment. Maybe you're dumping some chemicals in water, you have to clean it up. All those costs can damage the environment. So that's the impact. Okay, now let's look at categories of environmental costs. There are several categories. So the common category that we have, the most common one, is the internal and external. So internal costs could include trying to improve systems and checks in order to avoid penalties or fines. So we can put into place systems to ensure that we are not fined. So what could be the systems? I gave you a good example to say from now on we should have a green team. A green team should ensure that nobody maybe throws stationery anyhow. We should also have waste disposal costs. We should take note of waste disposal costs. These are internal within the organization. Then we can have product take back costs. Product take back costs. What are these costs? It's whereby maybe a product that you have manufactured has some defects. Then you should allow your customer to return that product. Regulatory costs such as taxes. All these are internal because you might pay tax such as the rates which people pay in the market. They are mostly to ensure that the city council is able to clean up the environment, because if you don't pay such taxes, there's a risk that the city officials cannot have enough revenue or enough funds to pay employees who will be cleaning the environment. Then also internal costs could also include upfront costs such as obtaining permits. So if you want to get a permit to operate, license fees, all those are internal costs. Back-end costs. The back-end costs are costs which you incur when you are trying to make your business in a best state. A good example is decommissioning costs. If you are trying to install a mining operation, it means you have to clear the site before you start installing. Those are decommissioning costs, or those are internal. On the other hand, external costs could include carbon emissions. So you can remember, as you're working in the organization, you can emit the environment. I think somewhere in Bangwe, if you go to Bangwe, I don't know now, but in those days when I was a little boy, there was a factory around Bangwe where inanunga kwambiri mapanga processes amava zifungo and chinazeka kudai. Those are carbon emission costs. So they don't affect you, but they'll be affecting people outside your organization. Usage of energy and water, all these can affect you. Forest degradation, healthcare costs, social welfare costs. So all these costs, they don't affect you directly, but they affect others. You can have a multiple choice question to say which of these are internal or external. That's the first classification. However, we have other classifications. For example, Hansen. Right, somebody trying to join?
No, it's me, never again. Water.
Okay. So there are other classifications. For example, Hussein and Mendoza said there are 4 classifications of environmental costs, which are environmental prevention costs, environmental detection costs, environmental internal failure costs, and environmental external failure costs. So these are how Hansen and Mendoza classified the costs. The same costs which I've looked at below. Someone can say these are internal or external. But somebody can say, for example, let's look at the carbon emission cost. Carbon emission cost under Hansen and Mendoza, we can classify them as the environmental detection costs. Right? So, for example, if we look at this cost, healthcare costs, for instance, we can classify it as the environmental prevention cost. You see? So the same cost can be classified in different ways by several authors. Then also the US Environmental Protection Agency also classifies costs in different ways. For example, conversion costs. What are conversion costs? These are costs which you incur when you're trying to process a raw material into a finished product. Potential hidden costs. There are some costs which are hidden, they don't affect you directly. They can also be environmental costs. Then contingent costs, costs which might occur because a certain event has taken place. A good example, if you pollute the environment, there's a chance that somebody can sue you. Those are contingent costs. Image and relationship costs. So there are those costs which can damage your reputation. Okay. Now, how do we classify costs in environment? In the environment, we classify costs into 3. We can classify them as regulatory costs, upfront costs, and voluntary costs. So what are regulatory costs? Those costs which regulate the environment in simple terms. So for example, notification. Try to notify people to say, if you do this, if you pollute the environment, this is what's going to happen to you. Reporting. You need to produce integrated reports. Monitoring and testing costs. So those costs which are there to monitor your performance. So city officials or maybe pressure groups will come in and visit you. Studies and modeling. So some people just conduct studies, research on the environment. In that way, they are trying to make sure that the environment is regulated. Remediation. What we mean is that when something wrong has gone, when something bad has happened in the environment, what are you going to do as an organization? Those are remediation costs. So for example, we are going to compensate the community. Record keeping. So we need to record all the costs that affect us. This is most common for accountants. Plans. So plans to protect the environment. Training. So training staff on how to protect the environment. Inspections. Protective equipment. So in mines especially, it's people put on a protective equipment. Medical surveillance. So when somebody has been affected, directly or indirectly, he or she should be compensated. Then we have upfront costs. So these are costs as you are preparing for the involvement, all right, or as you are working with the involvement. Those are upfront costs. So we have site studies. So before we start mine, we need to audit the site. We can prepare the site. Research and development costs. Engineering and procurement costs. Those are good examples. Then installation costs. So when you're trying to install machinery, then convectional costs. They can also be that category. So conversion costs can also mean regulatory somehow, but mostly let's put them under upfront. Because convectional is the stage taken to process a raw material to finished product. We defined them previously. Then capital equipment costs, materials that we have, the laborers, because laborers sometimes can, if not properly planned, the environment can be affected because these are people that are working. So maybe laborers can sometimes mean the machinery that we are using, not only manual labor. Then we also have supplies. So what products are we using? Which type of materials are we using? Will this affect us? That is suppliers. Not suppliers, but suppliers. So maybe stationary can affect us. Voluntary. Right? So these are costs categorized as voluntary. So these are costs which we have to do them at all costs. We can do them, we can ignore them. We have to do them for the benefit of the society, but we can ignore them. It's not a must sometimes. So involuntary, I want to be clear here, involuntary means something is not a must, but voluntary, it can be a must sometimes. So for example, outreach programs. Is it a must to carry out outreach programs? No. You can do community outreach programs, but you can decide not to do them if you don't have funds. Monitoring and testing. So you can monitor or you can decide not to monitor. Training course, training audits. So you can train people on how to audit the environment. Qualifying suppliers. So you need to choose the best suppliers because some can provide unfriendly products. Feasibility studies, recycling. So look at for products which can be recycled. I told you that in Malawi they were trying to ban those unrecycled plastic papers. But the question is, if we produce only recycled plastic papers, are people going to manage to buy them? The answer is no. Environmental studies. So studying the environment and research and development. Okay, I'll just tell you, people did the research and they discovered that if people can stop buying plastic papers, they are going to save 10 million a year overall. For example, a district can save 10 million per year if they are able to use recycled papers. Why? Every day when you go to the market, you buy plastic papers, maybe worth 1,500. So if you have got one paper, or maybe 3 papers which are recycled, it means you use them maybe for the whole year. That's the understanding. So we can argue whether it's false or true. The most examinable area on environmental accounting is the environmental management techniques. There are 4 of them. So we have input and output analysis, we have flow cost accounting, then we have activity-based costing, then we have life cycle costing. Let's look at these environmental management accounting techniques. Starting with input or outflow analysis. What are these? Okay, so some books call it as input and output analysis. What it means, we need to look at what comes in and what goes out. So this is common to organizations which manufacture. So when we manufacture, for instance, sugar, so the materials which we have imported in, when something comes out, is it beneficial to the environment? That's what we mean by input or output analysis. So the book says, I was using the ACCA book Kaplan, it said, it records materials inflows and balances this with outflows on the basis that what comes in must go out. For example, it says if 100 kgs of material have been bought and only 80 kg of material have been produced, then the 20 kg difference must be accounted for in as waste. Okay.